is, after all, the traders are here to learn something new and improve their performance. Okay, let's move beyond the usual disclaimer. Let's move on. Let me tell you a few things about myself. I am a real active professional portfolio manager. We are regulated and licensed inside Eurozone. So we actually manage money for other people, and we are a regulated asset management company. I have also created the Fotis Trading Academy. We did this back in 2014. And the reason was we really wanted to show people how professionals are working. We wanted to show them exactly how it is done at a professional level, because we could see there was too much hype and false expectations when it comes to trading. I was also the co-author of a great book on global macro, together with a great trader in the United States, John Netto. If you go to Amazon, you can find out about the book. We wrote the book together with many other great professionals, mostly in United States. And as you can see here from a few things about myself, my focus is on global macro fundamentals. And we had developed a 3-step process to help traders. Now, let me show you one common problem that traders are facing. And this is a reality. If you Google this, nowadays brokers are supposed to publish their results. You will find out some really scary statistics. If not 100%, 99% of traders blow their first trading account. During the first year of trading, 95% of new traders are going to lose money. Maybe you have heard the 90-90-90 rule. 90% will lose 90% of their account in 90 days. That means in 3 months. So what is going wrong? Let me show you a great analysis by FXCM. They did this analysis a few years ago. They analyzed 11 million trades from their clients. This is the frequency, the success frequency. How often were the traders right regarding the direction? And you can see, surprisingly, that they were right. They were not wrong. Aussie yen had the lowest score, 49%. But look at all the other currency pairs. Kiwi against the USD, 54%. Dollar yen, 57%. Aussie versus Kiwi, 71%. So the question is, if you get the direction right, and you do this most of the time, then why do you lose money? Let me show you the reason why. This is now the average profit over the average loss. You can see that the profits are almost half compared to the losses. For example, Euro USD, on average, traders are making 65 pips and they lose 127. If we combine all the currency pairs, on average, traders are going for 52 pips of profit and they lose 94 pips. So it is a matter of time before you blow your account. So this 90-90-90 rule makes sense. So here is the question. We recognize the problem. How are we going to make you a success and not a statistic? So this is where we come in. This is where we can help you at Fotis Trading Academy and explain about the 3-step process. Now, let me tell you something. How likely do you think it is that you will spend some time on the internet, you will find some free strategies, free indicators, combine them together, create a system, and you will retire like George Soros. You will find trading success. This is not very likely. What we say is that if you treat this as a hobby, if you treat this in an amateur way, then this is exactly how it is going to pay you. So we offer something that you do not require to be an economics graduate. You don't need to have a mathematics degree, a formal financial education, nothing like this. Let us show you a proven approach, exactly the same way that is done at a hedge fund level, what happens at investment banks, and the way that big professionals that manage large amounts of money are doing this. A three-step approach. Number one, understand the environment. Do not try to just trade random price action. Leave the charts alone, step aside, and just try to think, what is happening in the current environment? What are the catalysts that are driving prices? I'm going to speak more about this in a few minutes. The second step is to identify opportunity and risk. Where does the opportunity lie? Where is the risk? Shall I invest in gold or euro? Shall I invest in equities or bonds? Is the market moving sideways, or do we have a strong trend in place? Let me ask you something. Imagine you are a soldier and they send you in a foreign mission. What happens as soon as you reach your destination? Do you just come out of a plane with all your guns firing away randomly? No, this is not the way it is done. You have maps, you have plans, you do a preparation. Then why should trading be different? Only the last bit here, the third point, is execution, where we focus on technical analysis. And we will show you exactly what I mean by this. Usually what retail traders are doing, they go straight at number 3 and they focus only on technical analysis. But you must do these 2 steps first. So let's move on. Understand the environment. Step number 1, what are the current economic conditions? What is driving prices? Which theme of interest is currently acting as the catalyst that is moving the markets? Let's be practical. Last night, the US dollar dropped. If you want, you can place your answer in the chat box. Why did this happen? Was it because it reached a resistance, or was there another factor? What caused the US dollar to weaken? Excuse me. Why is this weak? Why is gold moving slightly higher? What is keeping the US yields lower? Do you understand these reasons? This is very important, and we can teach you. There is no reason for you to be an economist to understand this, because as soon as you understand the reasons, this is like the best trend filter that you can possibly have. Invest in yourselves and not try to find ready-made answers from so-called systems and magic indicators. If you understand this, then it opens a whole world of opportunity, and you can also identify the risk. This is what we are doing. This is an example. At the Fotis Trading Academy, every Monday, we are trying to identify what is moving the prices. So this is a little bit from a few months ago. We were trying to understand what is causing the prices to move. Last night, so I can answer the question that I placed, it was all about inflation. They have lower inflation expectations. They were expecting higher inflation because of higher growth. And now we see that the Fed starts saying, well, we do have low inflation and it seems to be persistent. So it's not something that will go away. It's not something seasonal. There you go, disappointment regarding the dollar. Dollar overnight during the Asian session collapsed. But we could see this coming weeks, months ago, and we could be prepared. So this is, we are moving to step number 2, identify opportunity and risk. Now, I was going to discuss about correlations and things like this. Instead, what I prefer to do right now, let's do this live, show you exactly how we identify opportunity and risk. Why do I mean practically by this? We have some great tools which are proprietary for the Academy. We are having scanners for MetaTrader that automatically scan all the different markets, so we can understand where is the flow going. Do we have risk on assets? That means riskier assets moving higher, like indices, commodity currencies, crude. What happens to bonds? What happens to safe haven assets? What happens to the dollar crosses? What happens to the euro? You see that the euro is very strong this morning. I also see this here on the relative strength chart. So the question is why? And we know it is all about inflation. So we know where the opportunities and risks lie. So if you go here, let me share here zero hedge talking / Forex. What happened overnight? The index has slumped further. Why? It's all about inflation. If you go here at the morning call, FOMC meeting minutes from 1st of November provided a little by way of new information, but you can see many observed that weak inflation could prove persistent. So they are having some really important observations about inflation. They are saying that inflation is going to be weak. What does this mean for the dollar, weak inflation? Weak inflation means lower interest rates. You will see overnight the US yields move down almost 2%, minus 1.72. What happened to the dollar? You can see here all the dollar crosses are in the red. Take a look at the dollar yen. We use these nice charts, market profile charts for MetaTrader, where we can actually see the volume histogram. This is why I said we are preparing weeks ago, sometimes months ago, for the upcoming move. Look at all the concentration of volumes, and we are breaking lower. It's simple. You can learn to do this in 1 month. We started breaking outside the value area. We call value area the area that has 70% of the volume. We broke outside. The news came about inflation, boom. But we were expecting this. How could we expect this? We were paying attention to the yields. We were paying attention to inflation. It's published for free on the internet. It's not something that you have to pay a very big subscription to someone to get access to this. You can go to Trading Economics. You can just Google this. All this information that I'm sharing with you are free on Google, on the internet. So this thing happened with inflation. There you go, the dollar. Now, we had decided at the Fotis Trading Academy, we analyzed the structure, step number 2 that I told you, and we decided to trade the euro. Let me show you the reason why. Because we started paying attention to this, the concentration of the volumes. We could see buyers being interested every time the euro was taking a hit lower. Around 116, 117, we could see large concentration of volumes, as you can see here, pushing the euro higher. So we started having a conviction, depending on the structure of the market. It's not trending yet, it's inside the range. And we know that if it breaks above this area, that's why we have placed the line, it could become a strong trending market. So we adjust our plan accordingly. So this is the process. Let me recap quickly. Number 1, understand the fundamentals. Where does the opportunity lie? You must have a strong fundamental factor to back up your scenario. We wanted to trade the weak dollar hypothesis, the weak dollar scenario, because of low inflation and yields moving lower. Okay, that's step number 1. Step number 2, where are we doing business? We are doing business in specific areas as dictated by the volumes histogram. So we could buy a breakout above 116.60. My preference is a break above 118.70, targeting 123, 125. Step number 3, let me go back to the PowerPoint. Execution. So I already started sharing a few things regarding execution with you. This is another scanner that we have. We are tracking in real time all the currencies, and we see which currency is outperforming the other one. The software, the algorithm, is breaking the currencies into indices, and we do a matchmaking. We match the strongest index against the weak one. We have other proprietary strategies. This is the F1 system that we have, which is going to work brilliantly in strong trending markets. If the market is trending, it tells you exactly where to get in, where to place your stop, and these triangles that you see are re-entries. But pay attention to this. When the market starts ranging, any trend following strategy will not perform that well. This is why we have a 3-step process. Step number 1, understand the environment, the fundamentals. And step number 2, understand the structure. Is it a trending market or is it moving sideways? Because you should adjust your strategy, your trading style, when the regime, the environment changes. You cannot have one strategy and apply the same strategy for every different environment. You cannot take any trend following strategy and hope that it will perform well in an environment like this, but it's moving sideways. So step number 2 is a recognition of the environment, and the third bit is the execution, the technical analysis. In the technical analysis, though, this is the trick. Let me go here. Do we have a strong trending market or a sideways market? And you are going to apply the appropriate strategy depending on the regime. This is the secret to this. The volume histograms help us understand the areas that we are looking to do business. Please pay attention to this. We are not trying to predict price action. We are not trying to predict what is going to happen next. We have economists winning the Nobel Prize for this. Let me tell you something. Price action is random. You cannot possibly know what is going to happen next when it comes to price. What you can identify, though, is the behavior of market participants. This is why we are using charts like this volume histogram, the market profile, as they call it, for example, because we focus on the behavior of others. Here, we could see the buyers absorbing the offer, pushing the prices higher. And the reason we are doing this, the key to your success is not about the frequency of getting it right in your trading. You can be right 45, 50% of the time and still make really good money. The most important thing is reward to risk. This is the key thing. How much do you win when you win, and how much you lose when you lose? This is the secret to this. So let me show you the other thing that we are doing, which is extremely important for your success. I'm going to go here. This is a free indicator that we have. If you go to our website, you can download this. So I'm just choosing a different color so it looks nice on the white background. How much do I wish to risk? I wish to risk 0.5%. So here I decide how much I wish to place in this trade. I also am very careful about my overall weekly loss. I don't wish to risk more than 2% on a weekly basis. So I will get an alert if I am exceeding these parameters. So I'm clicking, okay, you know what, let me add another target, 0.4, 0.5, click OK. Just wait a few seconds. So let's say I'm going to move this, just click F11 again, so I have a full screen. Right, let's assume that we had decided to buy the euro down there. And you said, right, we are breaking above this big volume histogram, above the value area. I'm going to buy a break over there, and I'm just going to place a stop below this big high volume node. So look now what happens. Firstly, you have a window inside your MetaTrader that you can move it around and place it anywhere you want. It tells you that based on your account, you are going to risk 0.45 lots. I said I want to risk only 0.5%. My weekly loss limit is 2%. So look now, these are my profit targets. 1 times my risk, 2 times the risk, 3 times the risk, 4 times the risk. You see, in this area here, I'm already making 3 times the risk, and it could go even higher. This is the secret. What we are teaching at the Academy is how to get 3, 4 times reward to risk trades. Because in this case, let's face it, we are all humans. We have weaknesses, we are biases. We are not robots to be disciplined the whole time. So you are going to make mistakes. We are making mistakes. You need to stay humble and accept that. You are human. You are going to make mistakes for any reason. Maybe you have some problems at work, something going on at home. Maybe you cannot trade full time and you have to attend also some other things. But this is taking the pressure away from you. You can be right 45, 50% of the time. If you are going for 3-to-1, 4-to-1 trades, you will still make money in the medium to longer run. When I say medium to longer run, I'm not saying in the next 20 years. I mean over a 2-3 months time. If you are taking a couple of trades per week, you will consistently start making money with less risk, smaller drawdowns, and most importantly, this is another extremely important thing that we wish to help. Less stress. We wish to remove the stress from your trading and constantly worried whether you are right. Did I get this right? Where shall I place my stop? Should I take profits now? How is this going to move, and so on? So what are we doing is we don't try to guess what the price action is going to do. Instead, what we are telling you is, let us show you how to do business from the right areas. Do business from the right areas and pay attention to reward to risk. This is the key thing to make money. So let me recap again, and then I would like to continue showing some more practical examples. Step number 1. Let me go to the presentation and make a quick reminder to those of you that came a little late. Number 1, understand the fundamental environment. Which ones are the catalysts that are affecting price action? Before you decide to trade something, be able to explain to yourself in simple language, why do you wish to trade that? Let's say, for example, that you wish to trade the British pound. Why? What is the reason? If you wish, let's say, buy this against the USD or sell it, why do you wish to do this? What is the factor that is pushing you to go ahead and take this action? You must be able to explain to yourself the reason why. For example, I wish to buy the pound because we are expecting higher interest rates from the Bank of England due to high inflation, and because of weakness in the US dollar due to the yields and Fed expectations. Or maybe you are going to say the opposite. We wish to sell the pound at specific levels because we are concerned about the implications of the Brexit. So be able, this is just an example, but whatever you decide to trade, you must be able to explain in simple English, in simple language. Why do you wish to pull the trigger? Second step, identify opportunity and risk. Identify the structure of the currency you wish to trade. Is it ranging? Is it moving sideways? Is it in the middle of a range? Or is it outside the range, looking ready to start trending in a very strong fashion? This is very, very important. And step number 3, only at the end you apply technical analysis. You use your strategy, you use your tools after you have identified the first 2 points. And why are you doing this? Why do we use technical analysis? It's only to pinpoint the entry and identify the risk and specify the target. That's it. Technical analysis is not supposed to tell you to explain in detail the price action. We observe price action through technical analysis. We do not try to forecast what happens next. And of course, the most crucial bit is risk management. And I showed you the way we are doing this with the tool. Now, I would like to show you something. We have a special lesson at the Fotis Trading Academy about this. Let me explain what this is. This is not a painting by Picasso. This is a correlation matrix. It shows us the correlation, the relationship, how strong or weak it is between different assets, currencies, equities, bonds, commodities, and so on. What you will notice is that at periods where we have extreme events, this is the heat map back from the collapse of Lehman Brothers in the United States. Do you remember this? When the bank collapsed, causing chaos in the markets, and everyone was running for cover. They were running for safety. What happened back then? All equity markets started moving together in a very strong fashion. You will see the perfect positive correlations. Bonds were moving entirely the opposite way, almost perfect negative correlation to equity markets. You see that commodity currencies were moving together with equities. Safe haven currencies like the Swissy and the yen were moving the opposite way. What does this prove? Why is this important to you as Forex traders? It's what I told you before. We cannot be 100%, if not at all, certain about price action, but we can definitely have a very high degree of conviction about behavior of the market participants, about the behavior of the markets. We know exactly at each different environment where to look for opportunities. So another thing that we are doing as part of the three-step process is to pay attention to other asset classes, to understand the environment. For example, take a look at, let me move a little bit, 10-year bonds, United States. What happens to the bonds? What happens to the Bund, the German Bund? What happens to the gilt? We are paying attention to equity markets, like the DAX, for example. And we understand by these key relationships, what is the sentiment like? Do we have a strong risk on or a strong risk off environment? Because if, let's say, you determine that everyone is running for cover, equities drop, and investors are looking for safe haven assets, then we know, based on this, in which currencies to pay attention. Buy the yen, buy the Swissy, sell commodity currencies. In an environment that everyone is looking for a safe haven, everyone is running for cover, this is what you should do. What happens, of course, this is not written in a stone plate. This is not 100% bulletproof. It's all about probabilities. So this is what we offer you. You have to make the transition looking for a guaranteed outcome, which is an illusion and does not exist in financial markets. You need to make the transition to a high probability outcome. This is the key thing. This is what professionals are looking for, high probability. So this is what our analysis is offering us. So another trade that I wish to show you, we were, I will use another platform. I apologize if if I'm switching around from platforms. I wish to show you something. You might find this surprising, but just to understand the power of these intermarket relationships. Over here in these areas, we could identify that this is a balanced market. We don't have a strong trend. This is the Aussie, by the way. We could see here we had resistance, and in this resistance, during our live sessions, we have live sessions every week at the Fotis Trading Academy. We said sell. We are looking only to sell the Aussie versus the USD. Now, who would like to guess the reason why? What was possibly the reason for this? I'm going to help you. It had to do with an intermarket relationship. Simon, if someone is placing an answer, please do share this with me.
Yes.
Why do you think? What was the reason? Why were we saying we wish to sell the Aussie at these levels into resistance, even if it was trying to break higher? Why?
Okay, well, Mansook's suggesting it's a double top.
Well, this is the technical reason. Well spotted, yes. We have a resistance. What was the fundamental catalyst? What kind of intermarket relationship was providing us a strong conviction to go ahead and sell this? Look, let me find you. Let's not keep you in agony. You go to investing.com. Again, what I'm showing you, it's free, and you don't need to go ahead and have any expensive subscription. I'm going to show you iron ore prices, the futures contract. Just wait a few seconds, click technical chart, so you get a better chart. Apologize for the adverts, it's free anyway. So just wait a few seconds. Okay, it's usually much faster. It had to delay more now, but we are doing the presentation, of course. Okay, right. Look at this top here. Somewhere around the 5th of September 2017, iron ore prices had moved down, causing also the Aussie to move down with this. They corrected. Look, this correction in iron ore prices is highly correlated with the move higher in the Australian dollar. But at this level, this high corresponds beautifully with the top here in iron ore prices. Iron ore prices corrected, they moved lower, and you will see that it exactly matches the dates. 5th, 7th of September. Okay, it's not a perfect correlation, so do not expect to move tick by tick. Look here, exactly the same dates, exactly the same week. We had the top at iron ore. This caused a collapse in the Aussie. Now the question is, you might say, hey, this is great, but why? Well, we are teaching you, we have a very good fundamentals course to explain all this. The economy of Australia is based strongly on the mining industry. And where do they export these mining and commodity products? Mostly to China. So what happens to China if there is demand or not, if there is growth or not in China? What happens with specific mining products? It strongly affects the Australian economy. It strongly affects the GDP. And as a result, it affects the Australian dollar. So when we wish to trade the Australian dollar successfully with high, strong conviction trades, we know exactly where to look for opportunity, for clues. We saw the move here. We saw it started moving lower. As soon as we witnessed iron ore prices started correcting lower, we knew that meant trouble for the Aussie dollar. And the good thing is you have time to act. These are weekly candlesticks. So you notice the price is moving lower. Here we just traded a simple breakout outside the trend line. It's simple as this. But we had a strong conviction, a high conviction, because of understanding of fundamentals and the environment I'm telling you. Then in the second step, we move to identification of the structure, and only at the end we apply the technical analysis. Let me show you during these times the market profile of the Aussie, the behavior there at the top. You will see what I have done here is I have merged different profiles. You can do this. Sorry, let me sort this out. All right. We noticed a balance over here at the top. This is the value area, and it broke down. Each profile represents 1 day. So you have plenty of time to act. It's not that you have to be glued on your screen to press the button, or otherwise the opportunity is gone. We noticed what we call the balance, the breakout, and again, what are we doing? Take out the risk tool. This is where we wish to sell, place the stop above. It gives us a multiple reward versus risk. So I would like to stop here, Simon, and give the opportunity to our friends to ask any question they might have about this.
Fotis, a couple of questions from a few minutes ago. Graham asked a question about the MetaTrader. Which MetaTrader is the best to use, offering the most pairs, commodities, etc.?
Well, what you see here, I'm having various demos from different Forex brokers. I like, for example, Pepperstone's demo because they have the pricing is good and they have many different Forex pairs, and their feed is very reliable. Also, when I wish to do intermarket analysis, as I can show you here, and I wish to study different asset classes, bonds, commodities, equities, currencies, you name it, I'm using one financial demo. What you need to, all the MetaTraders are the same. You just need to find a broker that will offer you as a demo these different asset classes that you are seeking. This can be important because we have the opportunity here, for example, to do an analysis of a different products. We click this button and we have a correlation matrix. So we see the relationship between the different instruments. What is going on? It helps us to further understand the environment. We click the button, we go back again here. Okay, if we Simon, can you hear me?
I can hear you. Okay. Yes. Are you okay?
Okay. Yeah, all good. If there are any other questions, please do let me know.
Yeah. Well, one question quickly. You had a heat map up on the screen a wee while ago. Can you just explain where that heat map was?
Yes. Okay, let me go here, the heat map. Now, this heat map became very popular. It was created by HSBC Quantitative Research. HSBC is having a great department specifically for quantitative research, and they analyzed the relationship, the correlations between the different asset classes during normal periods, boring periods where nothing happens, and in periods where we have important shocks in the markets. So if you see a correlation matrix displayed as a heat map in a period where nothing is happening, you will see that the relationships are normal. However, when we have a shock in the market, we have very strong correlations between the different asset classes. The myth of don't put all your eggs in one basket is gone, because you will see that they will all tend to move together. They will tell you, spread your risk. Don't put all your eggs in one basket. But look what happens. They all move together. You can see here with dark red, it symbolizes, it means a very strong positive correlation. Positive correlation means they move together. It's from 1 to -1. A correlation of 1 means that they are moving exactly together. It is the strongest correlation. So look at all the equities. We have a crash in the markets. We have concerns about the Lehman Brothers. And what happens to all the indices? Latin America, Dow Jones, Nasdaq, S&P, Eurostoxx, CAC 40, FTSE, DAX, Asian markets, Russell, all the commodity currencies, Aussie, Kiwi, CAD, some commodities, oil, copper, especially copper and iron ore, I will add. Look what happens. They all move together. Who moves the opposite way? Safe haven assets, bonds, the yen, the Swissy, in that case, the USD, because of the commodity currencies, obviously. So we understand during each different environment where to look for attention. This environment, for example, let me give you a practical example. Equities are strongly moving higher. They are making new highs. We don't see any signs of a correction yet. So it's a positive environment. It is a risk-on environment. We have a special lesson about risk-on, risk-off, and what to do in each different case. In this environment, it is good for the carry trade, it's good for commodity currencies. It also depends on the inflation a little bit, but we know exactly where to look for opportunities. We don't have 20, 30 charts in front of us and randomly trying to think where the opportunity lies. We know exactly, due to the relationships in the market, where to look for the opportunity. And we also have the tools to tell us where to look today for opportunity, what is moving, which instrument is losing momentum, which is moving in a strong, nice way. Let me also show you this. This is for the currencies. You see, we know exactly this morning, for example, yen and the Swissy are appreciating a lot. You see, the dollar is the worst performer. And then the algorithm is matching the strongest currency to the weakest currency. And we know where to look for opportunities. We don't just randomly, looking at the chart, trying to figure out where to place the next trade. So this is the important thing about this. We are not only showing you how to fish, but we tell you exactly where the fish are in the sea.
Okay, I can see that. Yeah, we've seen these before. Fotis, how does all this compare to level 2? A lot of people used to hear about level 2 data. Is this similar strategies, looking at the depth of the market?
Well, this is based, I'll tell you what this algorithm is doing. The issue, if you are trading Forex, spot Forex, and you are using MetaTrader, so far we were facing a very important problem based on what you said about level 2. We couldn't see volumes. If you are a small retail trader, you cannot see volumes, what happens behind the scenes. So we have tried to solve this issue. So we have this proprietary algorithm that scans all the different currency pairs, and it is breaking them into indices. So what you see over here at the top in this little box are the indices, the different currency indices, the dollar index, the euro index, the pound index, and so on. And then the algorithm will match the strongest index with the weakest one. Also, it tracks the momentum, and when you see it has a green background or a red background, it means not only they diverge, but also the momentum is in favor of the currency that is moving higher, for example. That's why you have a green background. So what you wish to do is to look for opportunities in currencies where the letters are green and the background is green as well. So if you are a trend trader, a breakout trader, and you start your day, you know exactly where to look for the opportunity if you wish to go long or if you wish to go short. And of course, the other great development that we had to sort the issue of volumes is the market profile chart. We can see exactly the volumes using tick data at each different point. If you are someone, Simon, that, I understand that as humans, we are optical. We like to, sometimes we like to see patterns. Okay, we are visual, as they say. Maybe you don't like to see this, you don't like to see this information presented in this way. We have another way to show this data. Let me show you, hang on. I think I'll need to go to the other platform. Let me show you another way to look at the data. And of course, I have deleted this. Okay. Murphy's Law, Simon.
That's okay. Fotis, could you go back to the chart where we see
there you go. Sorry.
Oh, you got it. Okay.
I'll just mention this very quickly. You can see the differences in the indices displayed as arrows on the chart, but you can also use in your own technical analysis and as histogram as well. Now, I think if you are a trend follower, if you like to use moving averages and oscillators, this can take it to the next level, to have something like this. Okay, you asked me to move to the market profile?
Sorry, yes, let's have a look at the market profile. We want to understand the horizontal blue bars.
Of course.
Just a little bit.
Let me delete the money management tool so I can explain. You know what? I'm going to do this. I'm going to click on merge. I'm going to unmerge the profiles. Now, each profile, it doesn't matter what it says there at the top. What happens, our market profile indicator plots the market profile chart on top on any MetaTrader chart you have opened. So whether it is 1 minute, 1 hour, 30 minutes, daily, weekly, monthly, it doesn't matter. The market profile chart will be overlaid, will be printed on top of any chart. So this is why you can also move it around. So every single market profile that you see here is 1 day. This is the period, 1 day. So what I'm doing now is you also have the ability to merge profiles together in periods, as you can see here, that the price is rotating up and down. We are looking for balanced what we call a normal distribution, a move back and forth inside a specific range. So I will merge. You see I'm merging the different profiles together to understand what is happening in this bigger area. Now, the dark blue area is what we call the value area. Why do we call it the value area? Because this is the area where 70% of the volumes have taken place. 70% of the volumes for this balance, this is how we call it. This bigger market profile is called the balance. 70% of the volumes are happening inside the blue dark area. This orange box is the point of control. It's the symbol, the point with the highest volume. What is the benefit of this? We know exactly where to do business. We don't waste our time trying to guess price action and what is going to happen next. We have a breakout. We buy, we know it is there is a good chance that we are going to have a strong trend. We place our stop and let it go. That's the purpose of this. It also helps us to identify potential targets. For example, we know in this area, we have some kind of resistance because we see it's the highs of this balance. Look at another thing, the information we can get from this chart. Look, Simon, the very thin volumes here.
Mm-hmm.
We have extremely thin volumes. It means here the market participants are not interested to engage into action. We need new information, new fundamentals to cause this to break higher. This is why I said I'm doing business here at 118.70. I'm not doing business inside here. I want a breakout above here in this area. So this is the usefulness of these market profile charts.
Okay.
But of course, yeah.
Okay, so Marguerite says there are countries which with various commodities influencing their market behavior. How would you analyze which one has the most influence? I guess we're trying to say, how is there a way that you can associate countries with various commodity?
Absolutely, and this is actually one of the topics inside the macro fundamentals course that we have, where we know specifically, we are telling you exactly what is affecting each different currency, what is affecting the euro, what is affecting the pound. Now, if we go to commodity currencies, I showed you before, almost 8 to 10% of Australian GDP can be attributed to the metals and mining industry. Now, let's have a quick test. What do you think is affecting the New Zealand dollar? Another currency from down under. If Australia is all about the mines and the metal industry, what is affecting New Zealand? What is it famous for? I'll give you a few seconds to think about it. You see, it's actually common sense.
We've got milk, fishing, and sheep.
Yep, you got this right. Do you know that we have an auction periodically happening about milk powder or powder milk, milk powder, and this is affecting the New Zealand dollar. Demand from China mostly for milk powder coming from New Zealand is affecting the price of the New Zealand dollar. And if you go, for example, to the Forex Factory calendar, you will see it's there. It is telling you which date this is coming out. So when it comes to New Zealand, it's all about milk in powder, meat products. There are more sheep than people in New Zealand. When it comes to Canada, it's about the price of oil. Maybe you don't know this, but Canada is the third largest exporter of oil to Japan. So crude oil is affecting the Canadian dollar. When it comes to South Africa, it is precious metals. It's more about this: diamonds, gold, silver. But to be honest with you, I do not trade the South African rand. I'm focusing on CAD, Aussie, and Kiwi. These are the currencies that I'm trading.
Fantastic. So I mean, we've got just a few minutes left, Fotis. Just to sum up, it's currency trading is your instrument based on
exactly
this fundamental analysis that you do. And what would you say the strike between the technicals and the fundamentals is? What emphasis do you place on?
As I was explaining here, what we are doing in our course, if you imagine this as a pyramid, the bottom of the pyramid are the fundamentals. We pay great attention, and we can also teach you to do this within a couple of months. We pay great attention to global macro fundamentals. This is the way it is done at hedge funds, at big investment banks. This is the way that big professional traders are working. They are not going anywhere without a firm understanding of global macro fundamentals. This is what we are doing. And this is also one of the courses, the macro fundamentals, is focusing exclusively on this. In the next step, we are moving to the structure of the market and the technicals, where we are doing it a little bit differently, and we are using the market profile to identify exactly in which areas it is better for us to do business. Now, what happens, because we have an understanding of the global macro fundamentals, it allows us to trade any different instrument we want, depending where the opportunity is. We can trade indices, we can trade bonds, we can trade currencies. Currencies is an excellent vehicle to express your global macro convictions. Actually, also tomorrow, because we have this firm grasp of macro fundamentals, Simon, we are also releasing a new course based on focusing on ETFs and stocks, how to create investment portfolios, whether if you just wish to invest in the markets, or if you have a small pension fund and you are not happy with the returns, using fundamentals and a professional way to approach this whole concept. We show you even how to invest in these markets. But as I said, the basis of everything is macro fundamentals. And then everything else, it's common sense. We show you exactly how to do it.
Okay. Fotis, we're going to have to just come to an end there. Already the hour is almost up. Where do we go to find out more about the Trading Academy and the courses? Can you tell us a little bit about?
Okay, let me show you. Now, you can visit, what you can do is you can visit FotisTradingAcademy.com. You can go ahead and download, it's free, no obligations, our 10-minute guide, but explain things a little bit better. If you click here, free resources, you can download our prospectus. You can also download this free risk management tool that I was showing you to determine how much I should allocate in each trade. If you simply wish to understand more about our courses and what suits you best, just click this button over here, schedule a call at a time of convenience for you, so we can have a discussion and discuss your options. Our courses are all right there. If you click our courses, macro fundamentals course, for example. And if you act now, we are also having some very good Black Friday offers. So you can go ahead, either contact Simon or send us a message. We are happy to have a discussion with you. All the information are here. What you get from trading, whether it is good for you, all the information are right there in front of you. Information about us. And tomorrow we are very excited. We are releasing a brand new course on ETFs and stocks. We are offering a database of 25,000 stocks, Simon. So someone could do a very good analysis if they want.
What is the Black Friday offer exactly? Just a quick question come in. What is it? Is it an overall percentage discount or?
We are offering a 20% discount on any course you decide to buy. If you come in our list, if you send us a message, if you click the contact us, we are going to send you more information about this. This is going to end at midnight on Friday. So you can, let me show you here, I had prepared this so you can come and have a look at our website, FotisTradingAcademy.com. Send us an email, send us a message, ask for to receive the offer, and we are going to do it straight away. Take advantage of this. It's Black Friday. We are also offering some very good discounts in the spirit of the market. And this is going to help you to take this to the next level. What we are announcing, and this is a first, Simon, we now have a partnership with a multi-million startup. Those traders that are doing well, they will receive the chance, they will have a chance to manage money professionally and receive an allocation. How about that? If you wish to have a career into this and you fulfill certain requirements, we are going to help you.
Okay.
Go ahead and have a career as a professional trader and receive an allocation.
Okay, Fotis, we'll need to wrap it up there, but thank you very much for joining us. Obviously, just get in touch through the website or drop myself an email and I can forward it to you if anybody's interested in.
Absolutely.
Or has any queries at all. You can direct them through myself or directly to Fotis through the website. But Fotis Papatheofanous, thank you for joining us this morning and making us aware, of course, that fundamentals do play such a major part in the trading world. It's easy for us to forget about the fundamentals. We all get carried away with charts and trend lines and moving averages. But of course, fundamentals are fundamental. We'll be talking fundamentals in our next talk with David Paul from Bert2Best, of course, as well. But in the meantime, I'm going to take the presenter role back from you, Fotis, and thank you very much.
Thank you very much, Simon, for having me. Thank you so much.